This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. So what I want to do today, I want to talk about MACD. I want to talk about ADX and both of those in multiple time frames, but I also want to show you how you can have strong momentum on the higher time frames and still have a counter trend set up against those. All right. This will make sense as we go through the different time frames, but I am going to use all 4 time frames: monthly, weekly, daily, and hourly, as I discuss this. All right. Now, if you want to learn more about some of these techniques, I would start with the book. You can go to rabilstockresearch.com/book to get more information. Also, if you like this content, please hit that like button and also subscribe. Okay, I'm looking at Aflac AFL. I've got 4 time frames up: monthly, weekly, daily, and hourly. All right. I do like this look where it kind of goes in this direction. This way I can use the monthly and the weekly. I can look at these together, and then I can also look at the weekly and daily together. And then I can also look at the daily and the hourly. All right. So what I want to explain is, if you notice what's happening on the monthly chart, we've got good momentum. You can see it based on the moving averages. You see how they're parallel? A lot of strength in that. And we typically want to look for pullbacks towards the 18 area as buying opportunities. We had a few of those here. But then if you notice what's taken place this year, we haven't had one. In fact, we've kind of gone into an accelerated trend where we broke through this upper channel line, and now we've accelerated. And you'd almost look at this as a you'd almost want to draw on an accelerated trend line, something like that. Now, when we get into that kind of mode, we want to look at how far away we are from the 18-month. All right. Now, if you look at the ADX and you look at the MACD, they're both confirming this trend. This is very important. This doesn't mean that you can't play for a minor pullback if you want to. You can definitely do that. If you want to play the short side and look for some retracement plays, it can be done in the right circumstance, especially when we're in an environment, say, where we've got some volatility in the market. All right. So we've got that in place. Now, if you look at this weekly chart, this is really key as well. There's a couple of things going on. Number one, we've gotten pretty far away from this moving average as well. We have the same look. The momentum is pretty strong. We have confirmation on this. We have confirmation in the ADX, but look at what happened with the DI. You see how we made a new high, we made a higher high, and that is a pivot. That we confirmed a pivot to the upside, and this is making a lower low. All right. Now, when this is up in this region up here, we don't know that this is clearly a this has formed a pivot high, but that's okay. If we're making a lower low, we know that we want to be on the lookout for some sign of weakness that would signal the potential for this to come back to this moving average. So this would be our target area in this situation. So I'm using the DI line. Now, every now and again, you might get MACD to diverge, but I'd be more inclined to think that you're going to see something with the DI line showing up at this point. Now, you could also look for this not making a new low, but I focus more on this higher, whether this makes a higher high or not. So we've made a higher high in price, but the buyers are showing some signs of weakness. And my point of doing it that way is that we can have where the buyers slow down and cause a pullback, but it doesn't mean that we're actually going to get a reversal in price because the sellers are really strong. So this is kind of a key thing, because all we're looking to do is play some kind of a retracement, maybe back to this prior low or back to the moving average. So that's kind of the target area, either one of those, somewhere in that range. You want to make sure you can put together a trading plan using either the daily or the hourly that allows you pretty good risk reward down to those levels. All right. So if we look at that, we can see these are extended. So now what I'm going to do is go down to the daily chart, and I'm looking for signs that the momentum is slowing. Now, we did have momentum slowing here where you look at it in terms of comparing this high to this high, right? But those are pretty far apart. There's a pretty good distance between those. As I've said in the past, the time between those two peaks, all right, typically you want it to be somewhere in the range of, I would say on the upper end is maybe 15 bars, but typically somewhere in that 8 to 12 bar level is really where you're going to get your best divergence. It's kind of like what's happened here. These peaks, I think that's a pretty good I don't even count them anymore. I just kind of look and see, okay, these are pretty close together. And if you notice what happened, I'm going to zero in on this for a second. It actually made a double top in price, but the MACD here could not even get above its signal line. It was well below the prior peak, but what caught my eye is this the fact that this couldn't get above its signal line. Now, the other thing I want to mention here is that the ADX is pretty strong, certainly strong here, pretty strong here, but then you can see it's starting to die out. It's dropping down below the 30 level. It hasn't quite dropped down below the 50, the 25 level, but there is some signs of slowing down there. I'd like to see that if I'm going to do this type of trade, meaning if I'm still showing this kind of strength in the ADX, I'm probably going to pass. But because the way this rallied up here made a second top, this was sort of dying off, and this made a divergent pinch type of a signal. Then I'm going to zero in and see if I can't create a trading plan off the hourly chart. All right, so if I look at where that is, that second peak, that's up here in this region up here. All right, so let's zero in on this time frame. So we've got all this playing out together. And if you notice what took place, we finally sort of broke. Now, you could argue that we broke the trend line here, and we came up and made a double top. But the violence of this move, and if again, you look at what the ADX was doing. So the ADX was pretty strong here, and it was still pretty strong here. MACD was borderline pinching, all right? But we had this big gap up. A lot of times, I'm going to be a little bit more... I'm going to be less aggressive when I'm looking at this above the moving averages. I want to have a trade on the trade time frame that is at or around its 18. I don't really want to do it way above the 18. Now, in this case, you could have done a pinch play to the downside off this bar and it would have worked out okay. But I like this right here. Here's where we get our 40 to 18 bounce. We've clearly broken a trend line, tested, come down, made another lower high, and we formed a clear downside pinch. And look at what the ADX was doing. You see how we have a much higher probability play at this point. Not to mention the fact that we had this open, it pushed up, and then it came back down through all these lows down here, setting up a pretty good opening reversal pattern that I think you could have taken as this dropped down below the 40. And that would have been really good risk reward. Now, you could use the 2 ATR approach, or you could go when it opens like this and you want to play it that way, you could play this pretty tight, all right, and keep the risk side of the equation pretty small. Now, we know what we're looking for in terms of the downside. We're either going to be using this prior low or the moving average. Now, I like using a prior low in a way because this is a moving line, right? I mean, we don't know where this is going to be or how long this is going to take to play out and where this is going to be in the end. So my initial target is typically going to be looking for that prior low area. So you figure that out, you create your plan, and in this case, it should have been a really attractive risk-reward equation, especially if you can take the risk. Now, when you're putting the trade together off the hourly and you're looking at what your risk, you might start out thinking that the risk is going to be here. But once this trade is put on and this hourly bar is done, I think you can tighten that risk. So you might create the position size based on this peak, all right, as you're triggering in. But then once this bar is done, I would have no problem coming up above this just based on the way it's played out and starting the day. And then you can really keep the risk down. And then you're looking at maybe risking, for whatever unit you're risking, 1 unit, let's call it, your upside or your potential reward might be 5 times that, or it could be as high as 7 based on the way this trade is setting up. All right. Now, I've talked to my subscribers about not being too, you don't want to micromanage these trades. You don't want to sit here and watch every nook and cranny. If you watch a bar like this, it's going to scare you out. You're going to be watching. Now, I'm not saying not to monitor the trade, all right? But you have to have a really good reason to exit the trade and not follow your trade plan, all right? I like to use trailing stops, and I would say if I started it here, I would use some form of ATR based on the original stop, not based on where I drop it to. All right, even though I dropped it really quick, all right, I'm still going to use the original average true range for my targets and also how I'm going to trail a stop. That's going to give you more room. You want a little bit of extra room in these trades. There's a decent amount of volatility. There's going to be rallies. If you have a really tight stop, you don't allow for any kind of rally in your favor, and then you'll never hit a target if you do that. This is really important. I hope everyone's following that. All right, so this is the method that I use to play counter trend. Now, I don't do a lot of this type of trading when the market's really strong. This is something that I would advise when the market is showing signs of weakness and or increase in volatility, especially when that volatility is showing up on the daily chart, but can also be in a situation where we've got weekly volatility. Now, insurance has been a really strong performer, but we're starting to see maybe some signs of slowing down in the strength of these. And the potential is that, again, all we're looking for is a pullback. We're not looking for any kind of a change in trend. So when we get this extended, this is the way to go. Anyway, let me know if you have any questions, and we'll see you next time.